Here we go. I'm going live now.
Hello.
Hey, hey, it's Nicola here from Conscious Crypto Traders for our live stream today, and I'm here with Teresa. Hi, Teresa.
Hi, everybody. Great to see you. Good to be here.
Awesome. So, guys, we'll just wait for everybody to join us. We have an action-packed live stream for you today. The market has had a little bit of a retracement. Are we going to dump further? Are we going to head back up again? There's been some critical rejection points in some of the charts. So we are going to be doing market analysis on the charts and going through the agenda. I'm just waiting for more people to come on to the live stream before we go over the agenda so everybody can get it. But basically, if you're new to our channel, what we do in our live streams is we use present moment market analysis on Bitcoin, Ethereum, and XRP, some altcoins, if people request that in the chat. And we use that as a way to teach technical analysis and have a look at strategy, have a look at mindset, psychology, and the scenarios that can affect price action. So let's get going. So today's agenda, Teresa is going to start off with the very first thing that we need to be a successful trader, and that's tools. So she's going to go over some of the tools that we use and the price action indicators, as well as the number two is making sure that you've got a supportive platform. So we're going to talk about the platforms that are out there. And number three is mindset. We're going to go into mindset. If you want to be successful, every trader will tell you, you have to have the right psychology and the right mindset. And number four, we'll save that for when we get to it. So here we are, how to be a successful trader. We're going to use today's price action on Bitcoin, Ethereum, XRP to start showing you some technical analysis and some of the indicators that we use to help us determine when to buy and when to sell. So Teresa, take it away. I think you can share your screen. So number one, to be a successful trader, you need the right tools.
Yeah, so Nicola and I thought it'd be really cool if we talked to you for a few minutes about TradingView. Lots of people use MetaTrader as well, but most of the people in the crypto space seem to be leaning toward TradingView. Personally, TradingView's just far easier to use, especially if you're a newer trader. I find their interface a lot more user-friendly. Everybody sets up their TradingView differently. So any trader you talk to has their own way of setting it up to make it easy. But the idea is you want to have a system that you can navigate quickly between the currencies that you're trading on the exchanges you're trading them on, as well as navigating between different time horizons, right? So the way I like to do it, I always put the currencies I'm watching in my watch list over to the right, right? And I include different exchanges for these currencies for different reasons. Like, so I trade on BuyBit. I keep BuyBit first, but I also do spot trading on Phoenix, other things against Bitcoin. So I include Phoenix in the list. I also make sure that I always have the CME chart available, because on Sunday afternoon when the CME opens, if there's a CME gap, it's a good idea to pay attention to what's going on CME futures. And I always want to make sure I have quick access to Bitcoin dominance. Anytime it breaks down below 50, we know we're in for an altcoin season. And clearly that's what's going on right now. Bitcoin dominance is broken down. Jeroen van Lange, who's one of our mentors, has a lot of really great videos about this, understanding Bitcoin dominance. And then you'll see down below, I also trade Ethereum and XRP, and then all the different spot coins that I do spot trading on, I keep down here at the bottom. So the other thing I like, though, depending on what level of account you have on TradingView, it may limit the number of indicators or the number of chart views you can have. So I highly recommend you go for at least the pro version, because then you can have more indicators live and more charting options. But what I do is I set up different chart views for different time horizons. So for example, this particular chart view is set up for very tight time horizons. So 5-minute scalping is this particular chart view. I happen to have it set to 1 minute. But that way I have all the indicators that I like to look at on a tight time horizon on this chart. I don't know what's going on with my volume right now. Something weird's happening there.
Oh, we can hear you perfectly, Teresa. There's no
No,
problem.
I mean my volume indicator. Something's
Oh.
weird in how the volume indicator is displaying here. Let me just flip over to this one. So I set up I look at 1 minute and 5 minute on one chart display. I look at the 15 minutes. I'm just going to close this one because something's gone wonky on the indicators on this one. I look at the 15 minute and the 5 minute on a different chart display. I look at it the hourly on a different chart display. Then I have one for 4 hour and daily and one for weekly. And you'll see, you might have noticed that each of these is color coded differently. That's to train my brain that if I'm looking at the yellow chart, I'm at the 4 hour or the daily. I never want to make a mistake as to what time horizon I'm looking at when I'm looking at any given chart at any given time. I also like to keep a favorites bar, so I have quick access to my charting tools. You can tell the ones I use most often, right? I use just a trend line, I use vertical lines, I use horizontal lines, and I use long and short positions. There's lots of other things you can use like boxes and whatnot, but 90% of the time I'm grabbing for one of those 5, so I keep those to easy access. And then I also keep, there's an indicator section here on TradingView where you can search for any different indicator and bring it up. Everybody can have a favorites list with all your favorites listed down here. But if you actually click on it, it'll come up in your favorites here right on the screen. And then you can turn it on or off, depending on whether or not you want to look at it. You can also turn off your trend lines if you just want to look at your chart with fresh eyes. Sometimes that's not a bad idea to do in case you've drawn your trend lines in the wrong place. But I like to turn my indicators on and off one at a time so that I'm clear what I'm looking at any given time. Ikimoku is one that's a favorite of both Nicholas and I. We're going to be doing more videos about different indicators later, so we'll dive into the individual indicators and how to read them. But RSI and stochastics too, for me, I don't trade without looking at them. And I think that's super important because a divergence on the stochastics or a divergence on the RSI is one of the clearest indicators of a market turnaround. When you look at, and that's actually one place where I use the horizontal lines if I want to make sure that I'm lining up with the highs and lows, right? So here we have a high and a lower high, so there's no divergence, right? But also low, lower low, no divergence. So the market could be simply continuing in the same direction it's going, is what that means, right? What else do we want to say on this, Nicola? Anything you want to add at this point?
Yeah, I'm just going to do a little bit of a share, guys. Today we're looking at, for those of you who just joined us, we would love for you to like and comment to just help us out. We are a new channel. We're focusing on helping crypto traders become more successful by teaching technical analysis using market analysis, which we're about to do on Bitcoin, Ethereum, and XRP mindset and scenarios. So today is all about the basics that you've got to have in place in order to be successful. So now I just want to go over to my charts on TradingView. TradingView, would you agree, Teresa, is a must-have? Oh, look at that. Like it's a must-have, yeah? You need everything.
Sorry, I muted myself and I can't speak. Sorry about that. Yeah, absolutely. You can't trade without a good charting software. And you've got to learn to master the trading software. So I think if you're not super comfortable with TradingView yet, it's probably a good idea that you're just paper trading or using a test trading website. Both BuyBit and Phoenix allow you to fake trade money. And I highly recommend if you're just starting out as a trader. In fact, I often still fake trade when I want to test out new strategies or see where a certain strategy is strong or weak.
So you'll see on my charting, I do lots of trend lines. So if you want to be successful, you're going to need to master the patterns, learn the patterns, master them. Starting with a clean slate, you can have a look at what's going on and just use the trend line top left up here to draw in your lines to see what's going on. Now, this is Bitcoin, and you can see that we pretty much have been trading sideways within a very large channel, right? The bottom of this channel is at around 52,934, and the top is around, there we go. The top is around 59.6. That just in the since the beginning of May, right? So we just recently had a little bit of a dump here, and the question is it going to go lower or not? So one of the ways you can tell is by looking at it and going, well, what is the pattern that's showing? Now, there are some analysts out there that are saying that this could be a head, a shoulder, a head, and a shoulder, which has completed, which means we would be going down to about here, around about 52,800, and others. You can see here this wick has shown that we've had a rejection and bounced back up, but pretty much to me, this looks like we're going down a little bit further for a correction. So if I turn my lines on, you can see here there was a potential inverse head and shoulders, and it faked out, like it didn't complete, because an inverse head and shoulder pattern is a breakout to the upside more often than not, but we came down, bounced off, and then we just came down, so we didn't live that out. But I'm on the 4 hourly. So on the 4 hourly, there's that head and shoulders. And then this is the target for it is, so I know there's a lot of people shorting Bitcoin right now. If you're looking at getting into a trade, there's no clear signal to get in at the moment. You're gonna have to wait for it to either bounce off of this trend line here at 53,000. And it's quite possible that we go down even further on this line here, all the way down to 51,485, and possibly even lower, because if you look at what's happening on the 4 hour, on the bigger scale of things, we have been trading in an upward pinching triangle, or a symmetrical triangle. See this pink line here? I always do pink for the bigger trends, right? That's been going up. So we've been getting higher highs and higher lows. These traditionally break to the downside, and we've already broken down. We've come down, we've come up, and we've tested the line. It's as resistance, and then we have come back down. So if we were to fulfill this pattern here, this is where we could do a couple of things, just depending on like what you wanted to do. We could do that, which is the line I believe I've got in, where we, yeah, there it is there. So that brings us down to this Fibonacci level here at 50,800 potentially, but also with these rising wedges, often they come down to test the bottom, which would be 56,926. And I believe that BitBoy Crypto has been quoted recently as saying we're not going to go below 48. So here's the thing you need to know about Bitcoin when it goes down. Often the pattern has a target, and we fall short of the pattern. Have you noticed that, Teresa? We don't fulfill the pattern sometimes when we go down.
Very, very common.
We pretty much fulfill it when we go up, but not when we go down, yeah?
Yeah, it's often only hitting 70 to 80% of what the target would be. So it's a good idea to pull your target short when you're trading the drops. Sometimes, here's the thing that's important to understand about trading in general, right? It's important to understand that you could put a buy order in at a certain level and the price might hit that level, but it still won't pick up your buy order. Because it depends on how many people are wanting to sell at that level, how many orders it will pick up, right? Because for every transaction, there's another person on the other side of that transaction. So even though the charts might reflect that it went down to 48,000, it might have only sold 1,000 Bitcoin at that price point. and yet there was orders for 20,000 Bitcoin, and therefore only 1,000 of them actually ever fulfilled at that price point, right? So if you go to the extremes of the target, even though the market might have hit that target, your order might not pick up. So most traders pull their trades in a little bit, which actually tends to reinforce that the market never quite hits where the target is, especially on the way down.
Yeah. So you guys, if you've got any questions, feel free to
Yeah,
put
we
them in
do
the
have a couple
comments.
questions.
Do
We've got a couple questions. Yeah. So a couple things I mentioned, we got asked to go into greater detail. So let me share my screen for a minute, and I will go back to what I was looking at here. First question is, what is the CME and why should we care? So let's talk about the CME, which is the Chicago Mercantile Exchange. The CME, or the Chicago Mercantile Exchange, is the biggest trading house in the world. And most of the institutional traders trade through the CME. So it's much higher volume for any commodity or asset on the planet, really, including Forex and cryptocurrency trading. And the CME closes on a Friday afternoon and then opens back up again on a Sunday afternoon. And so often there is a gap because especially currencies, especially cryptocurrencies, often keep trading on the weekend. The hobby traders, the non-institutional traders keep trading throughout the weekend. There's often a gap on a Friday night. Let me flip the CME open and you can see. And you actually can visibly see that gap in the charts. Now the charts are going to make a liar of me. Here's an example of one right here. Okay. So this was the Friday close. And the Sunday open was actually several $1,000s lower than this close. So it closed here around 50,560, and then it opened on Sunday at 47,400, right? So what often happens is if there is a gap in the CME, there's an expression in trading, when the big boys miss the boat, they bring the boat back. So when the institutional traders, if they had positions still open at this level, they don't want to lose money. They usually actually, force the price to come back to where the gap was. So this is a really good example of within, what am I on the 1 hour time frame here? Within 1 hour of the CME opening, this gap closed and the price came back up. So it's an important thing to pay attention to, especially if you're trading on a Sunday afternoon and you have a trade open. If you forget that there's a CME gap, your trade can go sideways pretty quickly because you could be trading a pattern down here and all of a sudden you're not clear why the market's behaving in a way that would be unpredicted. Well, it would be predicted if you're paying attention to the CME gap, right? Anything further you want to say on that one, Nicola?
No, that's good.
Okay. The other question was, there's a question about the RSI and the stochastics. So let's talk about stochastics right now. Stochastics is one type of RSI, and RSI simply stands for relative strength index. And in fact, I think I've got a chart here on the 1 minute time horizon where I've got both open, and they're both indicators of the momentum of the market. Like, so up here, what we see, let me turn off the Ikimoku cloud so you can actually see the price action better. This is the price action we're seeing on the price. This is the volume, in other words, how many people are placing orders at any given time. And these are the two relative strength indices. This is a regular relative strength indices. This is a stochastics relative strength index. And the main thing you want to understand about both of these indicators is they're basically indicating how much momentum is there in the way the price is moving. And so when you start to get above the level of the dotted line here, or when the RSI starts to top out, the market's losing momentum. So you can expect a market turnaround when it starts to get quite low or quite high on either of these RSIs. A lot of traders use the stochastics RSI actually as a trading strategy. And some scalpers use this. Personally, I think there's indicators that are a little bit stronger than RSI. But there are traders who use this. When these two lines cross, that's the indication of the market bottom where you would place a long. And when they cross up here, that would be the indication of the market top where you might place a short. Now, I'm not recommending that you do that, especially personally, I believe you should never trade against the dominant market trend. So if the market is trending upwards in general, I wouldn't be placing shorts. If the market is
Yeah.
trending down in general, I wouldn't be placing longs. But
We saw
scalpers are
that.
trading on a very, very tight time horizon. And so sometimes they're trading both the long and the short using the RSI. Sorry,
Yeah,
Nicola, go ahead.
we saw it. That's okay. We saw an what do you call it? An example of that on the Ethereum chart. So let's go over to Ethereum and see what's going on with
Sure.
Ethereum.
Do you want to share your screen, or do you just want me to flip to Ethereum
No, I've
right
got
now?
it here. Yeah. So in
Okay.
Ethereum yesterday, if we
I've
have a
stopped
look
sharing,
down,
so you can. You're
I'm
not sharing
sharing.
right now, so you'll need to.
I'm,
I'm not seeing your screen.
huh. Oh, I didn't press the
Something's
last
not right.
button.
There we go. Yeah, there we
Got it.
go. Okay.
So yeah, so I was looking at Ethereum shorting it, and it was kind of like like music that was just going on and on and on and on at the top here, and going, when on earth is this going to drop? We were way overbought. See, from here coming up to the top, the RSI is coming up here. So this is like so overbought, dipped down a little bit, but came back up, and it just kept going and going and going without falling until finally we made some corrections, came back up. But it was like I'm in a group of crypto ninjas, which is our private VIP, and we were going, oh my goodness, when is this going to drop? When are we going to get this correction for Ethereum? And we were just going, you'll see it here in the price, up, 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 up. Created a bull flag that ended up being a Bart Simpson, comes straight up, comes across, comes straight down, and then we fulfilled the short coming all the way down to hit the bottom. This pink line here is the bottom of the rising wedge of Ethereum. And we have to remember, we have not corrected since we went over 3,000. The whole psychological, it's going to go lower than 3,000 once we hit the all-time high has not happened. We just went sailing through 3,000 all the way up to almost 4,000, 4,300 and something, right? So we are long overdue for a correction, and we've got the first step. Now, again, we're talking about how do you become a successful trader? You learn how to draw the trend lines on these charts. We potentially have maybe a bear pennant, maybe not, I don't know, we will see forming. You don't take it from the top because that was already in a pattern. You come down here with your trend line, you draw this. So if this plays out to the downside, which it does most of the time, we're looking at potentially 38,000. And then if you look at what's going on over here on the right,
I think is what you meant. Yeah.
Side, sorry, 3,800. Yeah, used to Bitcoin.
Wouldn't that be cool if we came down to 38,000 on Ethereum? Oh my God, I'd have an extra million overnight.
Exactly. So you could see over here on the right hand side, which is the number of orders. There's a lot of volume right here, which is where we pretty much got rejected. See on the right hand side here where I'm circling, and then we came down, we dumped, we hit this line here, we got rejected, it came back up. Now we're consolidating into a bearish pattern where we could continue to go down. But look at this. If we break this trend line, this pink trend line, and then we break this next line here, which has significant support and resistance previously, this one here, this line here starts to thin out, like the volume here starts to thin out. And we could then drop all the way down to 3,668 or 67. And then if we drop down below that line, FOMO and FUD can come in and people can get really crazy, and we may see it go down into the 2,000s. So we want to watch for that. If you're looking
and
at
for the new traders on the call, we should say what FOMO and FUD are, because I know we've got a couple of newer folks.
Okay, cool. Well, FOMO is fear of missing out. You're missing out, so you jump into a trade when it's about to reverse because you don't really understand the market or the patterns or the trends. FUD is when there's a whole lot of what's fear, uncertainty, and doubt, but it's often also being created by hype by other YouTubers, one way or the other, and then so you get paralyzed and not know what to do. But this is clearly a bear trend. We've had almost a double top. In fact, I think we did get a double top as a wick, which is always a trend reversal. We needed it. We've bounced back here. So you want to be looking for the breakout confirmation of this line here to place a short if we're going further down, or a confirmation breaking out above this yellow line here to continue to go up and set another all-time high at around 4,490, something like that. So we're just watching that before we do anything else. And then the other one is XRP. And XRP, this is something that I stumbled across when I took all of my lines out, and then I saw a couple of YouTubers seeing this. This is XRP. XRP has been trading in this beautiful, on the daily, this beautiful symmetrical triangle. So let me put this in here, and look on the Ichimoku, we're due for it to go back up. So we may not see this continue to correct. So let's have a look at the lines. The pink line at the top is our resistance line. The rising pink line coming up here is where we've had significant support. We touched it once, we touched it several times here. We've just touched it there. I think that was yesterday or the day before, and we just got rejected off of it in this last dump here today. And we are looking at breaking out because we're coming up to the pinnacle. We're looking at breaking out any day now. Question is, will it break up? Will it break down? Well, this is a bullish pattern, so we tend to break up. We are also expecting good news out of the SEC lawsuit against Ripple, which could send this thing through the roof. And the target is, you'll see I've got notes. You'll get used to my charts. They're really dirty. Excuse me, I just got an itchy under my eye. The target, if it breaks out of this on the daily, is $2.70. Now, if we get good news from the SEC's lawsuit and we break out and we reach 279, and then we break through this Fibonacci level at $2.80, that's when things could get crazy, and we could go back to the last season's all-time high, which I think is somewhere between $3.50 and $3.80, something like that. And then once we get that, it could get really crazy, and there could be like very heavy volume trading for days. And then we could start going into price exploration, and there's figures all around us, $5, $8, $10 by the end of May, beginning of June. So this is a bullish pattern. It is more likely to come down a little bit more to test this line one more time to confirm this rising line as support, and then come back up and blast through there. That's kind of like what I think is more likely going to happen. Because of that, I'm currently in a short. So if you're
a couple principles you touched on there too that I think warrant really emphasizing. For those of you who really want to become successful crypto traders, it's really important, like when Nicholas talking about retracements, it's really important to keep in mind retracements are super healthy. In any given bull run, you want the retracements to happen, because if the price goes up too fast, it's also going to come down. Like, every rocket ship to the moon is followed by an elevator to hell, or the expressions we use in the trading world, right? So the first thing around mindset is to learn to love the retracements. Like, retracements are important. And when you can start to see they're forming a big pattern, we're starting to see a pattern on Bitcoin too, which may mean the current retracement that we're in might last another week or two. I made a video a couple of weeks ago talking about how May might be another red candle month, and that could be a good thing if we trade it properly. Retracements can be super profitable for you. And they actually provide a lot of stability with an asset like Ethereum or Bitcoin that's on the climb. think of it almost as getting a good toehold while you're climbing up the cliff, right? You don't want to be in a precarious position where you can just fall and slide back down, right? The other
Yeah,
point
exactly.
that you raised, and I really love how Carl the Moon talks about this on his channel. For those of you who want to be successful traders, it's really important to know no one can predict where the price is going. All we know are certain patterns generally have a probability of breaking up or breaking down. And all we're doing is watching the pattern for when it starts to break out of the pattern, and then we react. So even though Nicola is saying, you know, here's this beautiful triangle forming on XRP, we still aren't predicting which way XRP is going to go. We just know once it decisively breaks, and usually when a pattern breaks, it breaks up, comes back and reconfirms what used to be resistance as a support line. When you see that and it breaks above the previous point, that's a super safe place to enter your trade, because now you know you're into a good solid trade and the price is going to continue in the direction it's going in. So I just wanted to re-emphasize that because you touched on it, but I think it's one of the most critical things in being a successful trader. And it often gets glossed over. In fact, I often see comments in live streams saying, you know, you're always predicting both scenarios just so you can say you're right. No, nobody's ever predicting anything. We're just talking about what the possible directions it could move in. And if so, what would be the price if it moves in that direction? And that's what you trade when you react to the breakout.
Yeah, exactly. You respond to what the charts are telling you, which is one of the reasons why we're doing this live stream on how to become a successful trader. And that is good technical analysis is critical. Learning how to read these charts, learning how to read these patterns is really critical. For those of you who have joined us and haven't liked, we would love for you to help us out. We're a new channel, and we're really excited about what we're bringing. We want to be different from other YouTubers out there. We are having different conversations out there. Combining teaching, technical analysis, looking at market analysis of what's going on in the charts, and also mastering that whole mindset component as well, because that is your make or break. So today we're looking at what are the tools that you need to be successful. We've talked about TradingView, which we're on. We're just about to finish that and go to the next thing that you need to do. But I just want to finish up here with XRP. XRP, if you have a look at this rising wedge, has broken out of that rising wedge and it's fulfilled it completely, which usually it comes back down to where it started, right? Boom, there it is. There was a bear flagpole rather coming into this. So you could also draw from the top, excuse me, down here, and then you go to the top of the wedge where it broke out, which is here, which puts us at $1.3252, which means we could potentially break below this Fibonacci line here and come down to retest this support line, as I mentioned. And if we come down to test the support line, we could also we could wick all the way down to create a double bottom, which would be a really good sign that we are now in a trend reversal, because we have been trading downwards from XRP. Let's go back to the daily. And that would be really healthy for XRP. And with everything going on with the SEC and the positive news that everybody's expecting in the next week or so, we're already set up for this to break out to the upside. But again, we don't trade it until we've broken out and we know, which direction it's going to go in. Because here's the deal: if it breaks to the downside, the target would be 1 cent, and that's just highly unlikely. We might have a fake out, right, and then come down. We don't know. But my sense of it is we've touched this 3 times, 1, 2, 3. We may touch it a 4th time to confirm this is support, bounce up and come back up. So that's what we're looking at in the next couple of days. If you're wanting to place a trade in XRP, you want to buy down here, put in a long right down here on this support level, or a little bit under if you want to catch that wick there. and then ride it all the way up. It's possible we might wick down to 86 cents. I haven't seen anything on the chart that would suggest that the Ichimoku cloud is not showing we could go that low, but that is always a possibility. So you want to look at that. So that's number one, the right tools, which is TradingView in our opinion, with the right indicators, which Teresa went over. We're going to do single videos on the indicators and how to use them coming up. So make sure you are subscribed to the channel, click the bell, hit all so you get notified. We upload training videos every single day. We're doing interviews with some of the biggest YouTubers and technical analysis out there every week, and we're going live every week as well. So you can learn a lot by following us, subscribing, and we'd love your help to actually share the videos that we've got here as well. So then the second thing we need to be successful as a trader are platforms. Let's talk about the platforms that all of the big YouTubers are talking about, Teresa.
Sounds
the first
great.
one being BuyBit, right?
Yeah. So I think most people, sorry, you faded out for a minute. I think most people in the trading space that are trading crypto, I think the three top trading platforms that we talk about are BuyBit, Phoenix, and Binance. And they're both favored for different reasons. You know, Phoenix is phenomenal for spot trading. If you sign up a pro account with Phoenix, you can spot trade with 0 fees. That's just phenomenal because fees can actually eat up a lot of your trades. BuyBit, a lot of people love because they have these inverse perpetual contracts for Bitcoin, Ethereum, EOS, and XRP. And that means that when it's an inverse perpetual contract, it means every trade settles out as the cryptocurrency, not as USDT or US dollar tether, which means that you're accumulating the cryptocurrency, not accumulating tether, which a lot of traders like. And I think that's why a lot of people favor BuyBit as their favorite exchange if you're doing leverage trading. And then Binance just has more trading pairs than any other platform out there, is phenomenal for spot trading. But people are also doing leverage trading against Bitcoin on Binance as well.
Yeah, we've got some links down below that we'll drop after we've come off live, so you can use our links to get special bonuses. One of the really good thing about BuyBit and Phoenix is they do a lot of incentive programs for you to put more Bitcoin into the platform and earn Bitcoin rewards and earn bonuses. So I think that's one of the reasons why the traders, especially the YouTubers, love it so much. So you really want to be using these platforms if you're trading, if you're spot trading. You don't want to be on an exchange because you're just going to get done with the fees. There are also tax implications for some people depending on what country you're in and what the tax laws are in, because every time you trade you have to pay tax on what it is that you earn in some countries, even if you aren't actually converting it back into US dollars or euros or whatever your currency is. So you need to figure out from your own country what are the actual rules if you're trading, so you're not inadvertently racking up a huge tax bill and and also all these fees, and that eats away into your profits, right? You want to make sure that you're really smart about that. Awesome. So that's that. The next thing is mindset, and I'm going to just stop sharing the screen so we can chat. Any questions? You're monitoring the live at the moment, aren't you?
Yeah.
I'm not seeing the chat. Are you seeing the chat live on YouTube?
I am. We have one question. Can you show us how to make profit when the trend line is going down? That's a great question. You know, the key to making profit when the trend line is going down, well, one of two things, right? You can start spot trading. So you watch different assets, and when one asset is at the bottom, that's a good time to buy it. And when another asset is at the top of its normal trading pattern, that's a good time to sell it. So you're always selling high and buying low, right? So when certain assets like XRP and Ethereum have been really going up lately, and Bitcoin's been going down, well, when they start peaking out and Bitcoin bottoms out, that's when you would trade back and forth. You could spot trade over, and vice versa. When Bitcoin starts to moon and some of those are lower, you can trade back and forth. So you want to start to understand, if you're spot trading, which means trading without leverage, you want to start to understand which coins you want to accumulate. I think personally, the only ones worth trading is something Willy Woo talks about on his channel a lot, that there are certain coins that oscillate against Bitcoin, because most people in the crypto space just want to accumulate Bitcoin. And I think that's a really good strategy in the long run. Accumulating Bitcoin is what's going to make you a multimillionaire. So you want to look for those coins that oscillate against Bitcoin, and the retracements provide an opportunity to look at what's high, buy down, what's high, buy down. And you're always doing that seesaw back and forth across.
Yeah.
The advanced game would then be leverage trading. Did you want to talk about leverage trading on
Yeah.
this call? Yeah.
Yeah, I was just going to show, well, to answer the question, how do you make money when it's down, is you sell at the top here, you just sell it, and then you buy back in here, and you would have accumulated more of the coin, right? That's called spot trading. The other way you make money is by putting in a short, and I've got two shorts in the moment. One is not in profit, and the other is in profit. So let me go over to that. I'm in profit by 31% on my ETH short, and temporarily out of order here on XRP because it's just retracing upwards at the moment. But basically, if you want to put in a short, all you do is you come over here and you decide what price you want to go. You decide on your leverage up here. And then leverage basically means you're borrowing from the platform to increase the amount of profit that you can earn on the amount of money that you've got in the system. So in the trade rather, and then you just press short instead of long. Buying long is obviously you're buying low and you get out at the top. Selling is you get in at the you sell at the top to come back in at the bottom. Did I say that right? I didn't want to get dyslexic about that.
Yeah, I think you got it right. When we talk about leverage trading, we're always talking about creating a long position or a short position. And a long position basically means you're betting that the market's going up, and a short position means you're betting that the market's going down. A long is a buy and a sell, and a short is a sell and a buy. That's all it is, right? And so in essence, what you're doing is the exchange platform is creating that scenario for you based on you making a down payment, which is called your margin. And then leverage is basically the amount you're borrowing against the margin. So if you're at a 10x leverage and you do $1,000 trade, you're borrowing 9,000 to do a $10,000 trade, right? So the margin would be your down payment of 1,000, and the 10 times leverage would mean it would take the trade up to a $10,000 trade. Right.
Yeah.
And so you would get liquidated if you go below $1,000 below the price point at a 10x leverage. Like, so if the price drops by $1,000, you would get liquidated. So anything above 10x is highly risky. Even 10x is a little on the risky side. So leverage traders normally stay down in low leverage trades.
Yeah, and you would see that I just got stopped out on my XRP, and I would have stopped out in a loss. I'm not too concerned about it because I had a big win just before. So I was doing an experimental trade. So what's happened on that trade is that this is really important with shorting in a bear market. You have to make sure that you've got good risk management, right? It was only a very small position. It was very small leverage. And look, what happened is, like, I shorted it here, right? Came in here, made a whole lot of XRP all the way down, happened to be having some intravenous vitamin C at my medical center and some ozone therapy. So I missed the rejection and the bounce. And then it came back up, but I managed to put in a stop loss, because if it goes about above this line here, which is a resistance, and it clears this resistance, we could be going back up to this pink line, in which case it's time to put in a long, get out of the short, put in a long, make your money back. But that's basically it's shorting and spot selling and buying back in how you make money when the market is going down. Leverage trading is really risky, but it's also really rewarding. And this is where, our videos are teaching you technical analysis and mindset, because you'll see that when I got stopped out, I didn't blink an eyelid, right? You didn't see me blink an eyelid. Well, I don't know if you were seeing me at the time or whether you saw Teresa. I didn't gasp. I didn't get emotional. I didn't cry. It was just like, oh yeah, it just stopped out. I'm the Buddha. It's like, it's okay. I made a profit on the one before, and I'll make profit on the next one. And you're not going to win all of your trades. Some of the biggest traders that I follow will say, oh my goodness, I just lost a couple of $1 million on a trade last night. Nobody is 100% perfect in their record, because the market can sometimes work against you, especially if there's manipulation in the market. Okay, cool. So let's talk about mindset.
I want to just mention what you just talked about there a little bit deeper too. When a trader says they were stopped out on a trade, it doesn't necessarily mean that they lost money, right? Yeah. Because good risk management has it, once your trade is in profit, you move the stop loss to a profit position, and then you're waiting to see whether the market keeps going or whether it retraces. So often it will retrace and hit your stop loss, but you still will have made the first half of that trade. So often, even though traders are saying, oh, I've gotten stopped out of my last several trades, does not mean that they lost money. So it's an important distinction. If you got liquidated, it means the market went entirely the wrong direction and went all the way to the bottom of your margin, which I don't recommend. Leaving a trade without a stop loss between you and the margin. A, the fees are a lot higher if you're liquidated. But B, you're probably not using good risk management if you're getting liquidated on your trades. That's more like gambling than trading with effective risk management. And I don't recommend that at all.
Yeah, it's hopium. You hope that the trend's going to turn around. So this is why we're going to be doing lots of technical analysis trainings on this channel. We'd love for you to like the video, subscribe, do all that. Help us out. Get the word out there, because we're seeing in the crypto space so many people getting in and getting wrecked and losing their hard earnings because they're not following good technical analysis. They're trading with too much leverage, they're trading with too much money in any given trade, so they can't go back and trade again to make the money back that they just lost. All of these things we want to be giving you really good solid tips and ideas on how to set yourself up so that you can be profitable, and mindset is a massive component. So let's talk about that just to finish up the live stream. One of the things we talk a lot about in my Crypto Ninjas traders group, which is a VIP mentoring group, we meet 4 times a month. And one of the times we meet is to gather up all of our emotions, all of our fears and everything, and then we heal them, move them out of the body so that we don't trade from a place of fear. We trade from a place of calm, stillness. I call it the Karma Life Center. And what we've discovered, or what I've discovered as a practitioner, as I'm helping people clear out their limiting beliefs and what have you, is it's really important to heal your money wounds, because your money wounds will be like the lower levels of the Fibonacci. And if you're making money, and one of your wounds gets triggered, just like an indicator of price action might get triggered, it's going to drag you down to the emotion that has never healed over that specific wound. So you feel it so you can heal it. So the more you don't heal the emotions and the wounding around money, survival, abundance, the more you've got those Fibonacci's at that subconscious level that will do things like make you make stupid decisions, like jump into a trade when you shouldn't, right? Or jump out of a trade when you don't need to. Like the lower levels of those Fibonacci emotional wounds kind of like can anesthetize your brain sometimes. And Teresa, we've talked about this, right? It's like, I know better, right? I know better.
Yeah.
And you know better, but you didn't in that moment because that subconscious mind level of wounding was operating, clouding your judgment and making you do something in a self-sabotage way. The reason it does that is not to hurt you. It's the subconscious mind and your soul's way of saying, hey, I'm wounded and I'm not getting your attention. So I'm going to make you feel it and feel it and feel it and feel it until you heal it. So if you've got, like for me, whenever I lose money, right, my whole body feels sore. I feel really emotionally sore. And it's a lifetime process of moving that wound out so that you don't feel sore, and then you don't have to keep creating situations to keep feeling that emotion, to keep attracting that same scenario of loss over and over again. Does that make sense?
Yeah, really, really good.
Awesome. So the next thing we need to be doing is abundance blocks. And this is super, super critical if you're in the crypto space, because you can make life-changing wealth with cryptocurrency, and you can do it really fast once you know how, the technical analysis side, you've mastered the psychology, and you're getting in there and you're making money. And what can happen is that all of a sudden you've made, maybe 10,000, 20,000, 30,000 just on the coin going up in value. Least of all accumulating the coins if you're spot trading or if you're leverage trading. So all of a sudden you've got this level of wealth. And again, if you've got Fibonacci levels around abundance, of not deserving the abundance, not being able to handle it, not knowing what to do with it, then you'll go into a trade and you'll lose everything that you've just gained. So that's called capacitance. We need to get rid of the resistance to becoming abundant, but we've got to build capacitance, our capacity to hold wealth. So that means getting rid of your abundance blocks, right? Healing your money wounds and getting rid of your abundance blocks. If you don't do that, then you're going to be a slave to your patterns, and your patterns will repeat themselves until you actually start paying attention to them. Got it? And then finally, the other thing, it's finally to become successful is impatience. Master patience. Somebody said to me, patience is a virtue, right? And I've always said, who made that up? I want to have an argument with them. Patience is painful sometimes. It's not a virtue at all. However, if you're impatient, you could jump into a trade too soon or jump out of a trade too late, right? So you've got to master impatience. Do you want to say anything on that, Teresa?
Well, I think something, I love how Tom Hugard, who's one of the top traders in the world, talks about this one, right? He says, a lot of us as traders sabotage ourselves because we get impatient to make our profit, so we get out of winning trades too soon. And then we have too much hope on losing trades, and we have actually too much patience with the losing trade, right? And we keep hoping it'll turn around, and then we create this scenario where always our losses are always bigger than our gains. And I think that what you just raised speaks to that so profoundly. It's almost like an addictive behavior where it's like we're so desperate to hang on to the win that we actually move our stop loss up too tightly, or force ourselves out of the win too quickly, and too hopeful when we're in the loss. So there's a lot of behaviors you really got to watch in yourself, or you'll never become a successful trader.
Yeah, definitely. And when you get rid of the money wounds and you get rid of your abundance blocks and build that capacitance, you start becoming more patient anyway, because a lot of the impatience comes from a desperate need to make money, or a desperate need to be in a different situation than what you're in, or a desperate need to have more, or greed, if that's one of your patterns. So healing all of that can help you become more patient in and of itself. And then finally, in order to become a successful trader, we 100% recommend that you're always learning. and that you're always improving yourself. You're always improving yourself, your skills, your ability, and you're also improving your knowledge. So we recommend a course that we've done ourselves to learn the patterns and learn the technicals from the blockchain today. I'm going to put a link down below this video once we've finished. And that's kind of like how I relearned trading, because I used to trade on the stock market, right? And when I came into the crypto space, I acknowledged I need to learn about this. I'm not just going to go off and do it and then potentially lose all my money. Somebody who's done it before me can teach me and then make it faster for me to get to where I can be profitable and help me not lose as much, right? So that's Jeroen van Lange from the blockchain today. We love his course. Do you want to say anything about that course, Teresa, before we just...
Yeah, it's an excellent course. I think no matter how successful a trader you are, you should be doing at least 2 new courses a year and learning 2 or 3 new indicators every year. Because otherwise, if you get set in your ways, it's no fun if you're not challenging yourself to learn differently. But going back to basics is a really good thing to do, because every teacher teaches it differently, and they might catch stuff that you've not been noticing that are going to really sharpen the saw and make you a much better trader.
Yeah, awesome. Guys, thank you so much for being with us. And oh my goodness, thank you so much for all those likes. That's great. We are a new channel, so we're just getting started. We just hit over 100 subscribers, which is phenomenal for a new channel. So we really do appreciate you appreciating us by liking and commenting and sharing our videos that we post with others, so we can draw more people to the channel so that they can have the benefit of greater and greater knowledge, greater and greater skill, greater and greater personal development, and greater consciousness, so that we can trade more consciously and therefore become more profitable. So Teresa, thanks so much for joining me today.
Yeah, it was great to be here. Thanks, Nicola, and thanks all of you for joining. Great questions today. We really appreciate that. For those of you listening to the recording of today's call, keep putting your questions in the chat. That'll have us know what to focus on future calls. We're just getting our stride and figuring out what people need on this channel. So the more feedback we get from you, the better. We also run a mastermind group for people who are willing to help us figure out different scenarios that affect the price action. We meet twice monthly. If you'd like to join that group and help us research different questions that we're then going to put the answers to on this channel, feel free to reach out. We'd love to have you join our Bitcoin scenario mastermind group.
Yeah, and just before we go, we've got a very important scenario coming up on the 26th of May, which is Saturn retrograde, which always affects the markets in a negative way. And then we've got Mercury retrograde, which often affects the markets in a bull run in a positive way. So we're going to be doing some stuff on that as well. Thanks so much for listening, everybody. Subscribe, like, comment, all that stuff. Really appreciate your help for the channel to get it off the ground. And we'll see you next week in our next live stream. Plus, we're posting 2 new videos a day as well for trainings on technical analysis and mindset. Bye-bye. Bye, Teresa.
Take care, everyone. Thanks for joining.
Great.